Happy Friday, ladies and gentlemen, and welcome back at your friendly neighborhood PM with your top 3 market points of the week. Now, this week, markets have been relatively muted. It looks like we're going to finish around flat this week, depending on how the rest of the day goes. So without further ado, let's just dive right in and get you onto your weekend. At point number 3, it was jobless claims coming in at their lowest figure in the last 3 years. Now, that is important considering the fact that we have been seeing more and more headlines recently indicating that companies are laying off employees. So this does kind of go to show that that may not be as widespread as we previously thought. Now, on top of this, though, this number can fluctuate very wildly week to week, especially during the holiday season with seasonal hiring. Now, on top of that, one thing to keep in mind is the Fed is not going to have the November jobs report prior to their decision making next week. So every bit of labor data is important for them. So they are going to take this into account when they're making their decisions next week. At point number 2, it was Salesforce reporting earnings. They did report numbers largely in line with what the market expected. Now, what they did do is raise their revenue guidance going forward above analyst expectations as they continue to kind of push towards AI tools. They have now gotten around 9,500 paid customers using their AI tools, primarily Agentforce, which is resulting in around $1.4 billion in annual recurring revenue. So they are starting to pick up that pace when it comes to AI adoption with their tools. They've kind of been in the doldrums lately, so we'll see if that momentum can continue. And then last point number 1, you might have seen it in the headlines this morning. It's Netflix coming into an agreement to buy Warner Brothers for a roughly $72 billion deal. Now, Warner Brothers share, it's going to be a stock and cash deal, and they're going to be buying Warner Brothers stock at roughly $27.50. So there's going to be a bit of a premium there, of course, that we typically see in mergers and acquisitions. Now, this is a really huge move for Netflix. What this does is pretty much gives all of the legacy Warner Brothers properties as well as HBO properties over to Netflix for ownership. That means stuff like White Lotus, Game of Thrones, Harry Potter, and any one of the films in their library that you can think of. Now, they are going to spin off the cable network side of the business from Warner Brothers. They won't be taking ownership of that. But what this really does is, like I said, this really shores up their IP to continue dominating in that streaming space when compared to their competitors like Disney and Paramount. Now, they are going to face a ton of regulatory headwinds before this deal can close sometime next year, because this is a massive deal and usually there is a lot of regulatory scrutiny that goes in part of this. But, long story short, you might be able to watch Game of Thrones reruns on Netflix soon rather than having to go to the HBO Max app. Now, that does it for your top 3 points this week. What are we looking for next week? Well, I kind of alluded to it before. Next week, it's going to be all about the Fed rate decision. We are continuing to see kind of murmurs that we're going to see another 25 basis point cut, but we will keep you posted on that next week as well. Now, that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor or dig into the written weekend review. And if you do not have a financial advisor, please reach out. We're happy to connect you with somebody, answer all your questions. But as always, please go out, enjoy your weekend, and we'll see you the same time next week. Thanks again.